Good to be here. I wasn't here last year, I was here the year before with another company talking mobile payments and PayBack and all of that. But this year, I am part of a company, kind of a startup in a way, one that's been running at this for a couple of years, but the market is definitely heating up. As Jason mentioned, consumer lending in general, is one of the hotter topics, and we hear about it every day. And some of the interesting things that you hear with some of these lending companies is not necessarily their inability to have a demand for their products, but in many cases it's supply. Having money. In lending, money is the product. And if you don't have a supply of money, you don't have money to lend out, and obviously that's where the profits and the margins and all that are. So I thought it would be interesting. Gary, CEO of ZipRemit, is going to be on a panel tomorrow, so he'll be in a much better position for questions and answers. But today I have probably less than 20 minutes now, so I thought I'd run through lending kind of at a high level, talk a little bit about what Fintech is doing to the lending market. And I know there's a lot of retailers here, there's a lot of noise, there's a lot of options, and you know, as you can tell from my gray hair, I've been in the market for a while. And what I'm finding very interesting is the days of private label kind of all went affinity, co-brands, and are now moving back to private label. So if that seems to be the trend, then there needs to be newer products, newer technology, faster ways to deliver. And as we'll talk about here momentarily, is how is lending relevant to the Mobile Payments Conference. And I thought I would just play with that a little bit, MPC, Mobile Payments Conference. Certainly lending, it has gone online and is mobile, and I'll show you a couple slides here in a few. Payments as a whole, lending, loans, money, and certainly at the point of sale, provide purchasing power for consumers. And a lot of that purchasing power, and certainly some of the ways that we're doing things at ZipRemit, we're delivering those through mobile platforms. And then obviously on the conference part, we're all here to talk about how we improve engagement with our consumers and deliver something fast and direct and valuable to those consumers to create brand loyalty and those types of things. So we'll cover some of those as we go through this. Excuse me. So consumer lending is a $4 trillion market in the US, which is pretty incredible. It is growing 6% per year, at least over the last 3 years. Obviously we had the Great Recession, and you'll see a few charts where the lending dipped and is now coming back up. And consumer participation and balances are growing. So as you can guess, more money is being lent. That means sooner or later, more money is going to be delinquent and other kinds of things, and we'll reach further and further into that consumer base that will continue over time to probably overborrow. And so how do we manage those kinds of things with technology? This slide is showing participation, and it is broke up a little bit by category. The first two, mortgage and HELOC, is the home equity loans, which is interesting that over the last year that those are down a bit. And actually I've come to understand that home purchases are down a bit in a lot of markets, not necessarily from a demand standpoint, but from a supply standpoint. So if home sales are down a bit, you would expect mortgages and other things to be down. Certainly also with the lower rates, people are able to refinance and get better terms. Balances are increasing, as I mentioned earlier, and interesting enough, student loans, I was a little surprised by that number, but nonetheless, almost across the board, balances are going up, again, by category. The next slide kind of shows a consolidated view of the same thing, and as I mentioned earlier, at the tail end of the Great Recession, a lot of consumers and others were a little over leveraged. That has come down, but is now beginning to trend up. In 2017, now that we're, I guess, 3/4 of the way through that, those numbers will be out shortly, and I would expect that trend to continue to go up. Delinquency rates are still fairly low, but again, if you look at the tail end of all of these lines, they all seem to be pointing up a bit, right? So as a supplier of loans and lending to consumers, we're always looking for ways to reduce our costs, to reduce losses, to basically service better our customers and still make a profit. Here's one that I thought was kind of fun. This is a slide, and by the way, all these graphs and everything were taken off the internet. Credit Karma presented a couple slides at the most recent Lending conference. So 64% of their customers, and remember they provide loans, but they also provide credit reports and a lot of things. So they have an vantage point of seeing a lot of other programs in the market. But to their customers, about 64% of them are primarily engaging with them over mobile, which I thought was a little surprising. And if you look at the little box there, 80% of their users are active on mobile. So that tells you, well, I guess we're all at the Mobile Payments Conference for a reason, right? It tells you that mobile is here, and even from a lending standpoint, everything is mobile and will stay mobile. All right, so I thought I'd do a little bit of basics, secured loan versus unsecured. I think we all kind of generally understand that. Consumer lending is generally an unsecured loan under $10,000. Open-ended and closed-end credit are terms that are used basically for revolving and installment loans. And typically, a revolving account is used for a purchase, like a credit card. And generally speaking, certainly with a lot of the marketplace lenders out there today, some installment loans are used for large purchases, but generally speaking, they're debt consolidation and other kinds of things. And again, you can find numbers to support all these assessments in every category, just depending on where you look. But nonetheless, I was trying to kind of summarize. And then there's a lot of confusion about what marketplace lending is versus POS lending, and really marketplace lending is predominantly a web-based activity versus a face-to-face. So in POS lending, somebody's walking in, they want to purchase something, and the nice thing about that, it's a lot easier to look someone in the eye, to know that they're really who they say they are. It cuts down some of the fraud, some of the risk, and they're there usually to purchase something. Private label versus co-brand, I think we all kind of understand that. A lot of companies have gone to a co-brand or a affinity branded type of a program versus just purely a private label. And again, as we said earlier, private label seems to be on the increase. Private label cards for retailers generate higher sales, better customer loyalty, and basically bring the consumer back to that particular merchant or that particular group rather than allowing them to use the card or use their open to buy at other locations. And then the private label program, I think at the end of the day, is really best suited for the merchant as far as transparency, getting data, getting that kind of feedback, understanding how the card is used, and really driving their agenda rather than maybe a third-party branded solution. Okay, so private label in general, it's up in all categories, which is, again, the trend that we've been seeing across the board with the other charts. So all of these things are good. They're good for business. They're good for consumers. Gives consumers more options, more choices, better buying power. But if you're in the business as a retailer and you have a private label program, or in the case of the ZipRemit where we're supplying those services, behind the scenes, we're trying to deliver something with the lowest risk, providing the greatest access to consumers with the lowest risk. And there are a number of Fintech types or solutions now in the market that have really kind of changed the way this how this is really applied. And what I find interesting is those same Fintech opportunities is really what has driven some of these other third-party lenders into the space. So we're obviously always looking to prevent fraud, right? And as I mentioned earlier, a face-to-face transaction is always better than an internet-based one. As Jason mentioned earlier, you never know if the guy is really here in the US or maybe in Russia or wherever that fraud might be coming from. So when they walk into the store and you can look at them, it's a little harder to do identity fraud. Certainly not impossible, but a little harder. Portfolio analysis, and certainly today, with all of the AI and other kinds of technology that's available, the amount of data that can be collected, it is a lot easier to look at alternative types of data points instead of just a FICO score or other kinds of credit history. Because credit history is great, it tells you how you have been over time, but maybe today you lost your job, and knowing those kinds of data points impact future uses of the line of credit. And every time you charge something on a card, you're borrowing money new. And there's always risk that that money won't be paid or that balance won't be paid off going forward. So what types of alternative data? I think we all know screen scraping. A lot of these different sites, you put in your credentials, they go out to your bank account, they pull information, they're really signing on your behalf, collecting that information. We also know Visa, MasterCard, all kinds of different banks, certainly in the UK now, there are all kinds of open API access capabilities. So that is really kind of the next big wave, I believe, in the business and the gateways and all of these different services now, is being able to collect data points from all of these sources that in the past were never really available, and never available quick enough to make decisions on whether to provide continuous use of the card, maybe to lower a credit limit, whatever the case might be, or even to close an account. Mobile phone data, again, there are a couple of different programs that are out, FICO, Equifax have pilots, mostly overseas, because overseas there's an awful lot of folks that really don't have very good online relationships, so they're looking at mobile phone data as a way to kind of estimate someone's stature, position, the kinds of friends. And I was reading up on some of the different techniques. So the theory is if you're friends with people who pay their bills, likely you'll pay your bill as well. Interesting conclusion. 45 million of US consumers are called credit invisible. Again, something somewhat the result of the Great Recession and the millennials. My son, certainly being one of them, wanted to buy a car and never had credit in the past. And so what do? You know, all of us over time, through bank accounts and other kinds of purchases, store cards, whatever, built a credit portfolio. But some of these folks, you know, 25, 30 years old and have never really had a loan. We're always very cash-based, and how do we deal with those kinds of situations? So again, use of alternative data is very important when you're making those risk decisions on whether someone is creditworthy. Increased convenience, obviously, everyone knows we want it now. So the faster we can turn things around, the faster we can provide immediate access to credit through technical integration, maybe with the retailer, so that when you go and you apply for credit, that credit can be used right then and there, maybe through an integration with the store point of sale. We need to do that in an end-to-end, very fast and interactive way, so that a consumer or a borrower can then go in and immediately look at their account. Maybe they get a transaction receipt sent to their mobile phone. And then we all want loyalty points and discounts and other kinds of rebates as a result of leveraging or using, or maybe as an incentive to use and open those lines of credit. What I also found very interesting, and something that we deal with on a regular basis, certainly traditional banking probably has some of the best rates as far as lending rates. But private asset funds, a lot of the marketplace lenders today are going out into the market. They're raising private equity, and that money then is used to lend. A lot of them are also doing peer-to-peer lending. So you can actually go out, go through a portal, pick a loan that you might want to provide your money to, and you are now a micro lender, if you will. They also set it up in some of these different portals where I might give $100 to 12 loans, and those 12 loans then have another 20, 30 people providing $100, and together we manage risk as a group because we all gave loans to 20 people and gave our $100, so if any one of those loans fails, you don't lose all of your money. More of a peer-to-peer lending, and then certainly crowdfunding is another way. Again, Fintech really has driven the last three, and the ability to manage these asset funds, to manage the portfolios, and really keep the risk low is a function of that technology. So as my last slide, I thought this was interesting. This was actually used by the Credit Karma guys at that Lend It show. They were making an argument that lending isn't transparent for consumers, and certainly the data would support that. But for those of you who are in the marketing side of things, we all know what price elasticity is, right? If price changes, what is the impact on supply and demand? Well, this tells you that most consumers who are buying, or applying for loans are not very price sensitive. So there's a lot of opportunity. Certainly if you look at the bottom, that is basically the FICO score ranges, and up the side is the percentage or the APR. And as you would expect, the better credit folks pay a lower interest rate over time. But this diagram is pretty wide. So as a retailer and others consider putting out different credit products and using perhaps some of those funds to fund loyalty programs and whatnot, I think the consumers, the borrowers, want a good service. They're not as price sensitive as we all think they might be. And it really all comes down to what works for them at that particular point, and can they get the kind of service that they're looking for. So here's my commercial. ZipRemit is the company. We are in the private label consumer lending, very merchant-centric, and we really focus on a pro-consumer choice type of an approach. Not just pro-consumer, but pro-consumer choice, meaning that the consumer has additional or has several lending opportunities or different products that they can choose from. And again, that is kind of the new trend in marketing these days, is to provide those kinds of wider choices to those consumers. A private label customer has a higher lifetime value, and convenience and loyalty programs certainly increase their decisions to purchase or to use those loans. And higher sales, which 60% increase in sales for millennials is a pretty important number, as millennials now have more and more buying power.